Welcome back. It's time to look into your portfolio queries and we will do your life financial planning by our experts. Just in case you haven't yet noted down our WhatsApp number, you can do that. It's flashing on the screen, and also our email ID where you can send across your questions. Our expert on the show is Pankaj Matbaj. Pankaj, hi, good evening. Welcome to the show. And let's begin. We've got a question from Mr. Dhiraj Kumar. He says that he's 50 years old, still into a job. He has no idea about market risk handling, and he wants to start investing in mutual funds with medium risk and want to start almost 40,000 per month. And how should he go about having a mutual fund portfolio? All right. So thank you so much, Dhiraj, for sending across your question. And, yes, a lot of time has gone. You're starting at 50, but then it's better to start investing than never. I'm just hoping that you also have other investments in your portfolio, or maybe you're investing in other instruments, But having said that, a medium risk profile at the age of 50 is not bad, and 40,000, I still don't have any clarity, Pankaj, as far as the corpus is concerned and the financial goal is concerned. But then, yes, the first step towards mutual funds, although I'm not sure it's the first step towards equity. How can you help him?
Kavita, good evening, and thank you very much for having me on the show. See, as Mr. Dhiraj has mentioned that he does not know how to manage market risk. That is very, very important. But most important thing is that when you invest in mutual fund, you have to understand that fund managers are also doing that job for you. They're trying to manage the risk, but at the same time, selection of funds should be proper, and schemes what you select should be suitable as per your financial goals. Though Mr. Dhiraj has not given any information about his financial goals, how much he wants to accumulate, even he has not informed that what is his time horizon. But assuming that he wants to invest at least for 5 years because he's 50 years old, so if he's starting now, I expect that he will invest at least for 5 years or more than that. To start with, some hybrid funds like multi-asset allocation or dynamic asset allocation funds, flexi cap fund, and index fund can be a good starting point for him. So I recommend some schemes like ICC Prudential Balance Advantage Fund, White Oak Capital Multi Asset Allocation Fund, HDFC Flexi Cap Fund, and SBI Nifty Index Fund. So four different kind of schemes I'm suggesting to him, which are like diversified equity funds or hybrid funds. So Mr. Dhiraj can start with these schemes. Only suggestion, because he's new, markets are expected to be volatile for some time now. So he should not check his portfolio every day. Once you start investing, have patience, keep investing, and once in a year you can review your portfolio, but your goal should be long term.
All right, so this is like a rough sketch because you've asked us the question, Dhiraj, but then just start investing. If at all you want more clarity, because while answering your questions, Pankaj has really highlighted the main fundamentals that are needed in planning your portfolio. Just in case you give it a thought, Dhiraj, do send across your question again. We will help you navigate through this better. Let's move on and let's take next question now. Okay, now this is a question from our viewer, and he's investing in a couple of funds. His name is Vikas Gosai. His age is 28 years old. He's got 5 mutual funds. He wants to know if there are any changes recommended in these funds, and in 15 years, can he accumulate 1.5 CR? He's been investing since 2023. And so far, the value is 2,64,000. He's investing in Kotak Large and Mid Cap. He's investing in Nippon India, Vision Large and Mid Cap. SBI Large and Mid Cap, Edelweiss Gold and Silver ETF funds, Motilal Oswal Asset Allocation Passive Funds of Fund Aggressive. Okay, so interesting, but a very confusing set of funds to start off your investment with. Too many large and mid caps in his portfolio. I don't know what would be the reason behind that. But yeah, we need to sort it out for him, Pankaj.
Kavita, I agree with you. So there are 5 schemes, and out of these 5 schemes, one is hybrid, one is a commodity fund like gold and silver fund, and 3 equity schemes are there, and all 3 are large and mid cap funds. So all the schemes are good, but the allocation is not appropriate, I'll say. So first, let's talk about his target. He wants to accumulate 1.5 CR. But see, he has 5 schemes, but how much in each scheme Mr. Vikas is investing, that information is not available. But if I calculate, see, 2.64 lakh he has already accumulated, and if he wants to accumulate 1 crore 50 lakh in 15 years, so the calculation at 12% CAGR says that he should invest 17,000 per month and should also do a step up by 10% every year. So right now, I do not know that how much per month he's investing through SIP, but what he should do that I can tell him. So 17,000 per month with 10% step up every year with your the amount what you have accumulated now will help you achieving your goal in 15 years. That is 1 crore 50 lakh rupees. So see if you can invest 17,000 now, or otherwise start whatever you can increase by, and then later means you can increase it further. And as I mentioned earlier, that three schemes are large and mid cap. So what is my suggestion that from Kotak large and mid cap fund, you can switch to Kotak flexi cap fund, and from Nippon India Vision large and mid cap fund, you can switch to Nippon India multi cap fund. And SBI large and mid cap fund is already there. So there will be one large and mid cap, one flexi cap, and multi cap fund in your portfolio. That will be a better combination. So some changes as I'm recommending you, you can follow that and continue your investment. Rest two schemes are good. All the best to you.
Right. Can we discuss a bit on Motilal Oswal asset allocation passive fund of fund? What kind of an exposure are we talking about? I mean, this fund on its own, it's pretty enough for, have a diversified portfolio for one.
That's true. See, when it's a passive, first thing you have to understand that we invest in um, index funds. Now, because it's a fund of fund, so multiple asset classes, equity, debt, gold, silver can be there in a portfolio. Right now, so if you see, there is equity, gold, debt, everything is in this portfolio. So if somebody wants to start with, it can be a good choice. And for Vikas as well, because he has already invested in equity fund. So Motilal Oswal asset allocation passive fund is a good choice. Only one has to understand there are some passive fund in this category, as well as there are some equity fund as well. Active funds as well. So when there's a passive fund, it means underlying schemes, underlying funds are index funds. So Motilal Oswal asset allocation funds invest in multiple passive funds through this fund.
All right. Let's move on and let's take the next question. This is from Rahul. He's 45 years old and he's doing an SIP in a couple of funds. Mirror Asset, Large and Mid Cap, Edelweiss Mid Cap, Parag Parek Flexi Cap, Bandhan Small Cap, Invesco India Small Cap, Kotak Multi Cap, and he's also doing NPS 29,000 per month, which is mandatory because he's into government service. The corpus is needed is 1.7 CR. How is the fund mix and how much will he accumulate in 18 years? NPS corpus right now is 45 lakhs. Target is 15 CR for next 18 years. After that, he wants to opt for SWP for his portfolio. So how is the fund mix? Changes recommended and how can he go about it?
Kavita, fund mix is good. He has two small cap funds, but because his horizon is quite long, he wants to invest for 18 years. So if he's comfortable with volatility, he can continue in these all funds. All are well diversified funds. Only thing is that exposure to small cap is a little high. But as I mentioned, considering his long investment horizon, and if he is comfortable with the volatility, he should not be worried about it. And as far as target is concerned, see, he has already accumulated 1 crore 70 lakh by now, and he's been doing SIP of 1 lakh per month. So in 20 years, in 18 years, if I calculate at 12% CAGR, 20 crore around can be expected from the mutual fund itself. In addition to this, he also invested in NPS, and that is a mandatory contribution to his salary. So I expect that salary will also increase year after year in these 18 years. So if I consider what he has accumulated by now, that 45 lakh rupees, and plus his contribution, which I expect to grow at least by 7% every year with the increment in his salary. So around 5 crores he can expect from his NPS if I calculate at 10% CAGR. So put together, he can expect around 25 crore in 18 years, which is much more than his target, what he has set for himself. So he's on the right track. Only thing that if we talk about diversification, gold and silver is missing the portfolio. And right now, investors are feeling that what they have missed. So if Rahul wants to start contributing in that, my suggestion that Motilal Oswal Gold and Silver ETF fund of fund can be a good choice. So through SIP only start investing and stay invested for long term. It's not that because gold and silver have shown a very good performance in last 1.5 years, but because we always talk about diversification and importance of asset allocation. So considering that, my suggestion that he should also consider this fund in his portfolio.
All right, so very important. Also, I just want to understand how has NPS helped him amplify his corpus, or take him closer to his target. See, because he's a government employee, it's mandatory for him to invest in NPS. But if someone, doing this through mutual funds could have accumulated this kind of a value, possible, right?
Exactly. See, whether you talk about mutual funds or NPS, both are linked to market performance. So they're market linked products. So if whether mutual fund or NPS, when they invest in market, returns will be similar to market performance. But the difference when you invest in mutual fund, you have choices like you can invest in small cap, multi cap, mid cap, large cap, as per your risk appetite, as per your investment horizon. But it does not work like this with NPS. So NPS gives you now choice, not in government service, but if you are investing in an all citizen model, means voluntarily you are contributing. In that case, you can invest even up to 100% in equity now. But still, when you invest in equity, larger allocation will be large cap only. So there is a difference that mutual funds offer you more diversification, more flexibility to invest in different kind of market caps. So investors can invest in NPS, some part of their portfolio, but I think that only depending on NPS will not be a very good choice. At the same time, because in NPS, when investors invest, they invest for long term. In mutual funds, though, they have a long term goal, but when we see markets coming down, there's a bear phase. Generally, investors keep redeeming their funds. So if you are investing the combination of mutual funds and NPS, it can be a good choice.
On and let's take Mukesh's question. He's from Gurgaon. 15 years investment horizon, plans to accumulate 2 CR. Portfolio has ICICI Pru Blue Chip 3,000 rupees SIP, Motilal Oswal Mid Cap 3,000, Parag Parikh Flexi Cap 3,000, Bandhan Small Cap 3,000. Current portfolio is almost equity is 1 lakh. Will be stepping up by 10% every year. The portfolio, how is it? He wants to know. PPF, he's investing 5,000 monthly. Current value is 3 lakh. So Kanya Samriddhi also is investing 5,000, which is I think he's got 2 daughters, so 2,500 for each daughter. Value is 2 lakhs. So overall, at a scheme level, is the portfolio good? He wants to do a lump sum investment of 1 lakh, and also which multi-asset allocation fund is suitable for him. He also wants to invest in gold and silver ETF. So will that be a good way to go? So Kanya, Samriddhi and PPF, he wants to stop and maybe invest that money in mutual fund. Is that the wise decision to do? So 12,000 SIP, should he be continuing? And the rest investments I've already read out. Okay, so what will you recommend?
Kavita, he has set a target of 2 crore for himself, and that is after 15 years. So if I assume 6% inflation, the value of 2 crore today will be around 83 lakhs after 15 years. So in the previous question, what we saw, Rahul wanted to accumulate 15 crore, and the calculation says that he can expect around 25 crores. But here, 2 crore, the target itself is not appropriate. I feel that he has not considered inflation in this. But yes, how we can accumulate that and how is this portfolio, I'll definitely discuss this. So first thing, as far as Sukanya Samriddhi Yojana and PPF are concerned, see, PPF for 15 years, I also feel that returns are not that attractive. He can definitely reduce his exposure to that. But